maybe you can just chime in as well in terms of how, corporate Nigeria and just Nigerians in general can get behind, the authorities to wade through this problem. We saw what happened in South Africa last night with the raft of programs and measures announced by the president. It does appear that a lot of people are getting behind the government in trying to resolve these issues. Your thoughts on how we can see that happen in Nigeria?
Different economy altogether. The amount of local value added in South Africa is high. South Africa is a productive economy, not a natural wealth economy. South Africa can deal with contraction of a certain degree without getting to the bones. In the case of Nigeria, the marginal propensity to import is high. The average level of inventory that people carry normally is probably about 60 to 90 days, maybe 120 days. Now, from this point when you close the borders, and the borders were closed before, now you intensify that, you close the airports, you are actually coming to full, you're closing down things, and therefore, plus speculative buying and panic buying, the inventories of 90 days become inventories of only 20 days. So if everybody starts panic buying like we are doing, in 20 to 25 days, you start seeing shortages.
Right.
So
what is shortages? So shortages from everything from food to
everything,
everything.
Medical equipment, and everything. So those shortages lead to a life of its own. So the stimulus you need is actually to bring in products to calm people down so that there's no...
because we don't have the time to start producing now, clearly.
The other thing is that from the global perspective, it hardly happens that you have a global supply and global demand shock at the same time. But this time you have a supply shock in terms of China being the biggest exporter in the world, closing down and doing things. Then you have a demand shock because all social distancing and lockdown. So you're having both at the same time. So you are looking at global negative growth, regional negative growth, and then Nigeria caught in this whole situation with a very short inventory cycle, compounded by panic buying. So it's quite a delicate situation. So you cannot just copy what other people are doing in terms of stimulus. You need to think it through and see how you can actually bring in inventory of things so that there are no because shortages will could spiral out of control. The spillover effect.
So what I hear you saying is that the focus of, maybe you can correct me on this, is that the focus of these stimulus measures or whatever is the government or the central bank chooses to do now is to make sure that we can continue to have the flows from abroad. So to speak.
But then you've closed down the airports, you've closed the borders, so everything is by sea, and things are going to take long. But in the meantime, people are not going to the markets, the hotels are closed, the airlines are closed, so there's a crash in demand, and so that affects supply. So it's a different ball game altogether. So the stimulus package has to be measured and targeted, not just as intervention as the way the central bank would like to see it, but at actually getting supplies in as fast as possible. Right. Testing kits, ventilators, food supply, everything.
Right. Okay. Your thoughts on what should be the focus of stimulus? What concerns you the most in terms of the reaction of the fiscal and monetary authorities here?
Listen, the fiscal to me is very, very important because the monetary stuff is, it's more around liquidity, short term, it's more around, money flows. But I think, while we have concerns around shortages, I think the government would think very critically around essential needs, essential goods. They might have exceptions, so flights will have to come in and bring certain things. I think it's also an opportunity, not to waste this crisis, to also start looking internally. So if there's this big push around looking internally around raw materials, this might be the time where people start looking at let's improve our capacity to produce things locally. So, but I think it's going to be a collective effort. The government's definitely going to be very, very important in this particular initiative. But I'm a little bit more, not as worried. I think, the government will know what to do. And I think the private sector also is going to play a big part in this also, because we need to live our lives as normal as we can. So I think we also need to just tell the audience that let's not panic. and have hope and faith that things will work out.
All right, well, thank you for the assurance. I'm not sure how assured many are, but I want to hear from Charles on this point. Lanre just mentioned not wasting a crisis, and I was wondering your thoughts on that. The potential silver lining in all this for the economy, like Nigeria. A lot of comparison. There's been a lot of parallels with India, and what can we learn from other parts of the world, essentially, in terms of dealing with a crisis like this and underdeveloped economies?
I think one advantage is that the economy is not as complicated as some of those in Asia, for example. So the supply chain disruptions that your panelists have been talking about, I think are going to raise a whole host of problems for a whole host of industries around the world over the next month or two. At the moment, we've been running down inventories, as Bismarck said. But even the ventilator manufacturers will probably be requiring parts from China that they might have the inventories today, but they're going to have issues in a month's time. You take a country like Nigeria, and because there's less dependence on supply chains for most of the economy, because it's larger, more domestically focused, there should be a little, it's really hard to say. As has already been said, we haven't seen demand shock and supply shock at the same time. And the supply chain shock is particularly difficult to work out. But I would guess that a country like Nigeria, and again, as the agricultural sector, a lot of food is produced locally. That shouldn't be interrupted so much. And therefore, you do have parts of the economy that are less impacted. Countries that are much more industrialized, much more dependent on complex supply chains from Asia to Europe to the States, we can't even quantify very well the shocks that are going to happen to those factories and to those certain industries yet. So I think Nigeria's dependence on agriculture is actually helpful in this circumstance. Usually I want Nigeria to be industrializing, but right now it's kind of good that it's not so industrialized.
Right. Interesting point there.
That sort of thing which can help.
Okay, let's pivot to another very important point, which I'm sure would be a big focus for this MPC, and that is the currency. And we're just speaking before we started the broadcast, and I think it's important for especially our viewers and investors to really understand the difference in the demand and supply dynamics for foreign exchange now compared to 4 years ago and perhaps maybe 8 or 9 years ago during the global financial crisis. So can you just speak to that and potentially what weakness is coming for the currency?
Two things are important to note. The deviation from the equilibrium point 8 years ago and the deviation from the equilibrium point 4 years ago, this is lower. So the lower the deviation point, the less the adjustment you have to make to come to equilibrium. Two, in 2008 and 2015, there was a problem with the supply of foreign exchange, but there was no problem with the demand for foreign exchange. Now there's a fall in supply, 50% fall in supply, but there's also like a 30% fall in demand. So the gap we're talking about is not that much. So what we need to do, or what has happened essentially, is this: there's a convergence around 360, right? And the effective exchange rate, if you take 360 and you assume that 305 is used for petroleum imports, comes to about 372, right? The difference between 372 and the real effective exchange rate path is not as far as it was when we were at 108 and we had to go to 150. Right. So first of all, there's a convergence. Then secondly is the adoption of a crawling peg, which is what has happened. So you have the crawling peg, which allows you some movement. Well, we're not going to start speculating about where the rate is going to be and all that. It's the process of exchange rate determination which has changed, because you're now saying oil companies should sell to CBN and not the NMPC. Again, it has serious meanings there. No, I just want to leave that there.
That's an interesting point, and I think it's something that the authorities really need to analyze. How long is that window where the demand and supply dynamics are still somewhat in our favor? Because when the world gets back to work, if you like...
It has been analyzed. Okay.
Right.
So let me say that it has been analyzed. What you are seeing now is playing out of a process which is...
So the adjustment we saw in the I&E window is...
Well, it's much more strategic than you think it is. That's what I can say.
That's all you can tell us now?
Yeah, now.
Okay. All right, so some valuable insights in that. But your thoughts on the currency, because the point I was trying to make was that there's a narrow window, in my mind anyway, while the world gets back to work, that this demand and supply dynamics will be in our favor. Because at some point, when the world moves back to that normal,
you are not going to...
The demand will eventually...
No, you cannot run away from the fact that there's a misalignment between the currency as it's traded and the true value in the market. That misalignment, you have a process to reduce that misalignment, okay, and that process will take you in without sending panic signals all over the place. So I think everybody knows how deep the hole is, and everybody knows the path out of it. And it's, let me say that it's there's a pattern to this, and that it's very well understood and being articulated.
We look forward to the details. But I want to go back to Charles now. And Charles, earlier I was reeling out what central banks globally have done in terms of stimulating the economy. And your perspective on that, beyond, of course, adjusting rates, you know, how do you anticipate a central bank, such as the Central Bank of Nigeria, can really, you know, step forward to make a meaningful impact in moving this economy forward at this time?
Well, I genuinely think that one of the best things they've done in the last few weeks is to allow these exchange rates to converge at that 360 and to see them and to let the NAFEX move to more like 380. This is really good news. Nigeria's government gets 15-20% more naira for every barrel of oil exported than it did before, and that's exactly what you need when the price of oil has gone down so much. That's exactly what you need. So I think the central bank's move has been smart. I also think that it paves the way for something which is really direly needed, which is for the G7, the G20, the IMF to recognize that this is a global crisis